The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here, and we're looking at a situation that says the Dow is up 14 points at 21,546, S&P is up 240 at 2445, Comp Index is up 6 at 6,267. The VIX Index at this point is down. It's down 20 cents at 10.11. And we're looking at, let me do the QQQs. I just want to show you something here. 1, 2, 3 QQQs. Had a very nice rally. I was anticipating that either Tuesday or Wednesday or Thursday would start a doji type candle reversal with a down move, and that down move will be the test of inner strength. So far, the high of 141.90 has not been taken out. It's just an eye blink away. 143.91 starts a new all-time high. The 120-minute chart is in leg E with the MACD very extended but very positive, and the stochastic making the M-shaped pattern. See this M-shaped pattern right here at 96.09 is really high. It's near the absolute top of the range. So that says that the 139.90 area to 139.40s over the next 2-3 days is going to be absolutely key support level to hold. A break over the high that was made made on the June the 26th at 11:30 that morning of 142.29. That's going to be a big play, because what we've got here is another left side, right side price time match, which would go to, I can't go there, I have to go there. Then we go to the right, and I'll explain what I'm talking about. And we're looking at, there we are. Oh, that's very close. That would say by this afternoon. I don't think that's going to happen. Well, we don't know. That would be a left side, right side price time match, and would be going to the new level at this particular point of the high that was made at 142.29 on the 26th of June. But at this point, that 140 level is really important support, 140 to 139.50. And the weekly chart trying to make a nice cup formation. You've got this downtrend line right here, which has to be pierced decisively, hasn't yet been pierced decisively, right there. Okay, and you've got the same thing in the daily chart, same pattern. And in the daily chart, so if you're very accurate about it, in the daily chart we didn't yesterday, today we've popped above it, making on a very short-term basis, 140.26, important near-term support, and is a 141.01. Now we'll move on to, I want to look at gold. Gold is down about 2 at 12.17. That pattern that I spoke about yesterday and the day before, and I've been saying, this is a very important moment for gold, because it's gone a little too deeply in the weekly chart to the downside. That means that any rally now has to be even bigger than you would think. It has to really close. Doesn't have to close. It has to punch into the 1243 level. Now for gold, a 27-point move to the upside shouldn't be such a big deal, because it's done it quite often to the downside, even more than that. But this is going to be important. I don't see it yet as breaking out to the downside. There was an opportunity yesterday if it held above the 9-period moving average. What I'm really looking at is the arch formation in gold. Let me draw that in. It's really fighting two particular Chapman wave techniques. One is the arch formation, that lowercase h, and the other is the Chapman wave falling axe. In this case, it's the inversion. So you've got your trend line support, which has been broken. You've got your, so in this case, you know how I always talk about lower lows and lower highs for that falling axe formation? on the upside. In this case, it's the downside, and you've broken the support. So you're making higher highs and much higher highs and higher lows. Now you've reversed that, and you've started to make lower lows and lower highs. So I'm a little concerned here about gold, because this is part of what I believe that this would help us in looking at the inflation aspect that the Fed really wants. They keep talking about that 2% level for inflation. I think that gold is going to give us a good clue. The gold and the commodities, if we look at the TRCCI, which is the commodity index, this is the Thomson Reuters. Let me move the 120. Oh, I meant to show you. Let me just go back, because my whole point of showing the 120-minute chart was to say we made a peak D underneath the resistance, the up channel resistance, and the support now is at, it's just about 2,442. That's the area of support. If there is a close on any 120-minute bar underneath the low that was made earlier this morning, 24.39. If there is a close under 24.38, let's make it 24.3750. That would start to signal an arch formation is occurring now in the 120-minute E-mini chart. That's why I showed it there. Let's go back to what we were looking at. We were looking at gold. Let's see. Yeah, so gold is that arch formation. Now, I just want to get rid of this because, most importantly, I want to look at the dollar, because there is a relationship, but it's a relationship that kind of comes and goes. And that relationship is, I usually say that within a year's time, for a period of a month or so, you'll get 6 to 8 weeks, maybe twice a year, where gold and the dollar go in kind of the same direction, not necessarily in a mirror image where the percentage up is the percentage down. But what's really important is that what you see is the trend, the basic trend. And what we've got now is the dollar is just a decided downtrend from that peak G top in the daily, peak D in the monthly. But let's go to the daily, the weekly. The weekly had a top back in January the 6th of this year at 103.82, and we're trading now at 95.77. So it's given back, not in time, because in time it's taken a little long. Well, let me just see here. Yeah, in time it's taken longer, and we haven't got there. And usually that says, now this particular instrument you're looking at is trying to find some kind of support. So let's keep that in mind. Most importantly, the dollar needs to break above 97, close above 97 in the weekly chart to say, hey, now we've got a chance for a trend reversal at this particular point, still making lower lows and lower highs. Gold is also making lower lows and lower highs. The pattern is just a little bit stronger because that weekly chart hasn't broken. It's gone to about the 50% or a little bit more than 50% lower. But what's really important, it hasn't gone as low as the dollar in the weekly chart. So I'm looking at this and I'm just saying, I don't see strength at this particular point. So let's go on. We want to look at the EUR-USD, and then we're going to look at something that we looked at yesterday. This is we looked at yesterday, but I don't believe I looked at it. I looked at it during the break for one of our dinners. And leg F in the weekly chart of the euro-dollar currency pair was still holding quite well with the MACD and stochastic good. The monthly chart has had a nice move up. The 120-minute chart you can see is arched over. But what's really important, we've got a potential peak E with the MACD just about to turn negative, and the stochastic still good, but weaker than it was in the last pop-up. We'll talk about this when we get back, and then we're going to look at the DXJ, I believe it is. Well, DXJ. And we'll talk about that as well.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. The IWM right now is down 65 cents. You see that trend line, how important that trend line is? It got right to that declining trend line from the 142.90 high that was made on the 9th of June. And it's just been a consolidation with slightly lower lows and slightly lower highs. And that weekly chart, I'd said, in the IWM Russell 2000, sideways for now until it really takes out the 9-period moving average, because the technicals, the MACD is still very weak. And the stochastic is at 78%. Now it's under the 80% in the weekly chart. So I want you to just go back. So it's what did I say? It was TXJ. That's it. So I spoke about this yesterday during the. No, I didn't. I did a whole analysis of it during the one of the breaks. And what's really important about this is at 52.55. This is the Wilshire Japan Hedged Equity Fund. It made an all-time high back in 2015 in June at 57.97, dropped sharply to the 37 area in June, July of 2016. Now it's at 52.55. It's about a 57, what is it, about a 60% retracement to the upside. And the weekly chart is just kind of holding and hugging the 9-period moving average and using it as support at 51.97. 52.55 down 6 cents. And look at this beautiful left side, right side price time match in the Chapman Wave methodology. And look what happened. It went right to a peak D, 1 bar. So far, it's gone 1 bar extra to what I've called the left side, right side price time match. But that's not the issue. The issue is that spike to the high of the 9th of May at 52.92. And remember, this is a hedged equity fund, so this is kind of giving you a sense both of currencies and many things at the same time. What it's really saying is we've gone sideways. This kind of pattern says you might pop to a new high, but you're liable to come back into the pattern. This is almost like the flag pattern that I talk about that goes straight up, and that's the flagpole, and then you get this sudden pullback. Within that, you should get a Chapman Wave 120-minute chart, if it's a daily chart, or even a daily chart, peak A, B, C, D, going toward exactly to or just above the previous important high, and then a pullback back into the range again. So we're going to be watching this very closely. If there's a push above 53.50, I have to admit that the weekly chart would improve a lot, and that's going to be a big positive. So a break below 52 says sideways, chop, 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 consolidation continuing. Now, I got a caller. I didn't see. Did I see a caller? The caller is. We've got a caller, and I'm not sure who it is. Who's the caller?
Hey, Basil, this is Ben.
Hi, Ben. How are you?
Good. So, question on the SPY.
Yes.
So, if there is a new daily up move on the daily, through,
you mean if there's a new high above 245.01? I think that's what you're saying, right?
Well, I guess either way. I guess where I'm looking to see where your thoughts are is, do you see overall the market having the horsepower for this to be that final coda phase you're talking about, or do you feel even if there is a new, in a daily up to a leg D or E, that it still needs a digestion before a powerful move like a final coda phase to make these monthly D's and E's would could actually happen now?
That's a very important question at this particular time. And let me just explain a couple of things. I had an email, and the question was, so to clarify your stance that the market needs bad news to have a correction, I guess you're also saying the market has the potential to go straight up forever if there's never consistent bad news. So, let me put the whole thing together. What I've said for at least the last couple of weeks is that the weekly chart hasn't yet even given me a sell signal in the Dow and the S&P. It did do that in the Qs, and it did do that in the SMHs, and it did do that in the XLK, even though there's been a really good bounce. But that was the reading as they went down to the most recent lows. But I never got that at all in the Dow and the S&P. So the package now says, quite simply, that if there's a move up, we've made a peak C1, peak C2. 245.01 was the high on the 9th of June. It tried 4 days later to break that, to make that D. It didn't. It went to 244.87. That's just, what is that, 15 cents or something like that away, or 16 from breaking to a new high. And essentially then came down quite sharply, at least for this particular pattern, came down to the 240 level. Now it's at 244.21. The pattern that I've been anticipating is that any rallies should start to fail, and then we should get an H-type pattern that goes and retests the 240 level. That the exact low was 239.96, the low of the 29th. Now, because of the reaction, I'm not saying what the Fed said or did or anything, but the reaction of the market to the Fed speak yesterday was to have a very powerful move to the upside in relation to the gap, and from the low that was made on that sudden news event intraday pullback. So going from 240.85 to yesterday's high of 244.20, that's a pretty darn big move. It hasn't yet taken out the high, and that says to me that I have to consider, at least for now, that I've got to wait for the end of the day, because my analysis has been that midweek we should see a rally into midweek, and then that rally should see some kind of a doji candle, and the following session should be a sharp down move. And that's kind of resting on today's action going into tomorrow. Now, let me go back to this whole thing. If you don't mind, I want to put, if you've got a moment, I want to put the package together, because it's so important. And I've been talking about this. I thought I was quite clear that I was saying it's very unusual to have the daily charts pull back so much in the Dow and the S&P, not impacting the weekly chart at all. So I went to a sell mode in the daily and the weekly, in the daily S&P and the daily Dow, and I was expecting that the weekly chart would follow, but I had to wait for that to happen, and so far it hasn't happened. This is actually very good right now. This is good action off the 9-period exponential moving average, even though the technicals in the weekly chart are not great at all, but this as a SPY is holding. So it seems to me that I have to be somewhat flexible, and that's the reason why for the short position that we have in the Dow, we've got a really tight stop just on a one-to-one short position. And I just have to say, let that play out. So far, we're still in the trade. Now, this is what I would say to you. If there is a close just a sneak above, I've seen this before, where it finally goes to that leg D, and if there's just a push above 245.01, maybe it goes to 245.16, and then closes down, and then the following few sessions are quite weak, then I have to consider it's that pattern I call the right arm extension failure pattern. But what that does is it goes to leg F in the weekly / alternate count C. So the question is, so now you can go with the alternate counts. I have no choice but to go with the alternate counts. Now, I wanted to give you exactly what I'd be looking for so that you know basically what we're looking at in the monthly chart, because they close above last month's doji candle would be a positive. So can you hold on?
I can, yeah. I'm very interested in your assessment on the monthly.
Okay.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Let me just go back for 1 second. I need to answer my engineer. No, I have had trouble with that. No. So I don't have the IMs there. I just have it in the den. Thank you. So the Dow's up 20, S&P is up 3, and we're on with Ben. And so Ben, this is what I'm looking at here. The anticipation of a failure pattern going into midweek was based on the stochastic being down in the 47-50% area. It's now at 65%. It is rounding, which is good. So is the on-balance volume. In the SPY, the MACD today, if it closes like this, This will be the first time it's crossed positive. So I have to see how that strength is held into the close. Now, the way I'm looking at the weekly chart, it's saying if you've just held the 9-period moving average since it broke out the week of the 11th of November, there was only one bar that actually closed below. Well, make it almost two, but basically one bar with red candle of the week of the 14th of April that closed under the 9-period moving at 232.51, and even the ones that dipped under it have closed above it. So I have to say that's important. Now, this is what I'm looking at in the monthly chart. The monthly chart would have gone negative if that arch formation with a 239 something low from 2 weeks ago was taken out and it went down, because that would have made the weekly chart negative, and then I would have had to say, okay, finally you've got your doji candle at a potential at least short to intermediate term top based on the monthly chart. Now we've got to watch real closely because 234 is the 9-period moving average support. So you can see why I'm looking at this and I'm saying, hey, this is a very diverse market. In a situation like this, who would have dreamed that the autos are doing so well over the last week, and that there'd be such a strong bounce in I can understand a bounce, but a very strong bounce like this in the Qs and the SMHs, that says, hey, this might turn into a buy mode. That could have been the low. It would be unusual to have such a huge move up in those particular instruments and not get a bigger pullback, but that's been the nature of this market. Stay with what's working. So I'm just going to make it. I was
going to say that I guess the ultimate question is there a level, whether it's the SPY or the Dow, that would convince you that we're now into the upthrust, the final upthrust of your COTA phase?
So now, talking about the COTA phase, I'm going to spend a little time, maybe not now, but maybe next week, going back into that COTA phase, because the COTA phase, well, I consider that we've had at least half of the COTA phase, which is what we call a final phase. But I'm looking at this, and I keep hearing ads in all different mediums about the crash to come. And as long as people are being have this hanging over their head that there's a big crash to come, I don't see the crash actually coming. That's why I've been calling this the consolidation, and I've been watching the weekly charts very closely, because these weekly charts, that's what's going to give the news. If I just right now, if I go to the QQQ, you can see that even with the bounce, the Qs haven't broken really the key resistance level that was made back on the week of the 30th, which was at 142.29, but it's still a really nice bounce that we had with the gap. So let me just give you the scenario I'm looking at, and then I'm going to say to you, what would be a breakout that says, hey, forget about the downside, at least for now, because we've got a good few weeks of upside to come. And what I've said is Dow 21,620, a close above that would say to me, hey, you know what? We've had rotational corrections, and that's the name of the game. It's been the name of the game since the summer of 2010. It's continuing. You rotate through weak sections, and then they become strong for a brief period. Strong sections have a pullback, and that's just the way it is. So if you're looking at an index, it's better to be in an index than a specific stock if you're looking to short, because at least you've got a little bit of a cushion because it's the entire group. But if you see a stock that is really weak, like an Orly or one of those in the wrong sector, and I'll be talking about sectors as well over the coming weeks, then you can go with a sector. So yeah, let me make it clear. Look at the SPY at the close today. If the SPY is closing anywhere above or close to the high that was made on the 19th, 244.73, it's just 40 cents away right now, says, you know what, real good chance you're going to make your leg D. It'll be an alternate count, but at least it'll give you that D above the 245.01 area. And the weekly chart at this particular point is just saying, no, it's not, there's no short at this particular point. You have to see a breakdown. Now, and then I wanted to add this because I know that you are aware of it, but I'm going to just reinforce it. Yes, the VIX index has been an incredible instrument saying there's buying pressure, even today, 10.05. And I consistently have said, if the VIX starts to hold, not pop once, not pop twice, but to hold on a weekly basis in the teens, that's when you're going to see selling pressure, number one. Number two is if the market perceives any news as good news or no news, rather than perceives whatever it is as bad news, that is a positive for the market. And that's I think, a really important aspect is that to get back to the question, yes, as long as there's the market hasn't perceived any news that's coming out as bad news affecting the market, it's giving some stability to the market. But the VIX and bad news should go together. And whatever it is, when it comes out, you will hear something bad and the VIX will start to move up. And if the VIX holds that gain, then the bad news is probably going to be held and be repeated again and again. So I don't know how clear I can make it. VIX has to be in the teens to really start the downside pressure in a consistent way. And we just haven't had that.
And lastly, to complete your formation of the H formation you're expecting, I guess, over the last week, would that also require bad news, or do you feel that's more of a technical formation that you just saw pure technically?
No, at this particular point, by day's end going into tomorrow and then the weekend going into Monday, if there's no new high, then it has to be a bad news thing that pulls the market down. It can't be the sudden one-off like we had a few days ago that had the market plunge. It's got to be something that is consistent, persistent, and it's got to be interpreted by the market as, here's a real problem.
I didn't mean a correction, like bad news correction. I just mean to complete what you see as a formation that you see.
Oh, yes. So to complete the formation, we've got an H pattern, which has held very well at about the 50% level in the SPY, and now it's rallying. So this is what I would normally do, and I'm going to do it right now. I would draw an M formation. The H goes to an M formation, and that's really what we're going to be looking at here. And that's the reason why I say, end of the day, if there's weakness at the end of the day, followed by weakness tomorrow, we're closer to forming the pattern that I'm looking at.
Got it.
At this particular point, I'm just being blunt. It's gone. Yep. The SPY's rallied a little higher than I expected because I didn't expect yesterday's bounce to be as strong. Hope that's clear.
Good. Yeah, I just try not to miss another election, acceleration
I know.
here. So. Thanks.
Okay, thanks for calling, Ben. Always appreciate it. So, folks, I've got some questions here, and we'll get to them as soon as I return. Dow's up 23, S&P's 3.5. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So let's just look at this CLNS, which was asked in the den a moment ago, trading at 14.64. It's called Colony North Star Inc. North Star, I don't know. Well, I'm not sure. It's just in the gas. I don't know what it is, what field it's in, but it's looking really good. I must call this a leg B because it went below that the start of the trough that began peak. Leg A to peak A back on the 6th of June. So I'm calling it B. Stochastics 84% good and rallying. The MACD has turned positive now with a nice gap to the upside in the green and red lines. That's the faster moving average over the slow, the 9-period differential. But I do have it in leg D and going to the what is that? Is that 15.30? 15.30, I believe. No, 14.72 area, which is the 200-period moving average, which was resistance before. So, yes, it looks good. I would say at 1463, 1440 to 1436 is a good support. Nice, good eye, and it's making the arch formation, the V-shaped formation, and the V-shaped formation has 14.97, both as a target and as a resistance point, and that would start leg C in the monthly if it goes above. Nice, good eye. So a couple of things that I had a question about it here was the OSX, dollar OSX. That is the oil service, I believe. Yep, oil service sector. Yeah, it's a nice little candle today after a reversal yesterday. This is important because I think it's trying to form a base. If I go to the OIH, which is the oil and gas, has a slightly different but pretty much the same in pattern formation. Trying to hold. The MACD is good, but the price is not really broken out. It has to break out at 24.69 on the OIH. It needs to break above 25.78. It needs to close actually in 26.20s so it can start to tackle the left side high in the 26.50s way back in mid-June. And that's really what I'm looking at. But I am looking at the weekly down channel as suggesting that this is about where you should expect an arch formation to form. So I'm keeping my eye on it. I don't really see anything yet, but I have kept an eye on it in a couple of the stocks in the sector that I've wanted to buy, and I've just held off a little bit. So GT, yes, that's the question, and that's the answer. Now, next one was high-grade copper. I haven't looked at for a couple of days. High-grade copper is just in this trading band. I don't see anything yet. It's neutral to me on a trading basis. It looks like it wants to go towards the 2.70s at 2.672. But it better just hold 2.6. Let me give you 2.662. It better hold that, because if it doesn't, it's going to make the arch formation and take out the little candle of the 10th of July. So just sideways, holding okay. Let's put it that way. Apple. Next question was Apple. Apple. Nice candle today, but it's also just stuck in a range. And these really the big guys like Apple. I mean, look at Google. Google's had a really nice single leg A up. It's hitting this trend line resistance right here. The way I'm looking at these, and this could be very upsetting if I'm wrong, because it would have been a great entry point at 900 in Google, trading at 948 right now. But the weekly chart still suggests to me that there is a consolidation coming, and it's in the process of still consolidating. I just have to keep looking at it that way. Amazon had a nice move to the upside. They've got this whole thing going on with Amazon Prime. And hey, even I bought something on Amazon Prime. I can't believe it. So what we're looking at here, Amazon at 998. Very important. This is the candle. This is exactly what I'm talking about, what I'm expecting in the other charts, that there's some formation over the Wednesday, Thursday period that takes Friday and makes Friday a weak session, and that's going to be very important in my work. That's all I can say about it. Next question is, so Paul wanted to know about his Walmart, and I said yesterday, it's the start of something, but I'm thinking it's just a pop-up. Well, Walmart's up 1.02 at 74.96. Well, Target, there was some news about Target that's been looked at favorably. It's at 52.96 up to. Now, remember, what we've been looking at is the characteristic of this market. I'm going to make a big deal about this, is that formerly very weak sectors have become bounce and potential trading sectors for the summer doldrums. So I'm now, for the first time on the RTH, looking at this and saying, okay, where could it bounce to? The RTH is 79.67 up 40 cents, had a big gap up. Now it's pulling back. Is this a bounce that's worth playing, or just something to keep note of? So in the sector analysis, this is what I'm looking at. So the question was Target. What was with Target? Walmart, Home Depot. Look at this Home Depot chart. Same thing, tries to bounce, had a big pullback from the peak F, only a C as I read it at this particular point. I'm still calling it a C. I could really make it a D in the monthly. I'm keeping it as a C for now. Been fantastic, building materials, appliances, etc. But at quite a big pullback for Home Depot in time, not so much in price. Had a high of 160.86 on May the 16th, and now it's pulled back to 100, big deal, 153. So sideways consolidation right now. If Home Depot takes out 149 support in the next week and a half, it's a real problem. So I hope that helps you there. Next question was Facebook. Facebook made a new high. That new high, I'm calling it a leg C. I'm giving it the benefit of the doubt, which says it still could go to a D. But now look at this. Look at the speed with which we've gone. Peak A, peak B, peak C, leg D in the weekly chart, and invariably these things have a quick pullback. So Facebook's had a spectacular move, held the 9-period moving average in the weekly chart since it broke out back in was that also 11/11? No, that was January the week of the January the 6th when it broke above the 9-period moving average after a pullback from the 133s down to the 114s. Look at this, a huge move to 159. Very nice. I think it's getting a little tired, but it can have a little bit more. It's at 159.40. I think it can go to 160.30 to 160, maybe 160.80. Let's see how that works out. So I want to do it in this section in case I run out of time. Within the context of the markets, we're looking at, if you go to, say, the airline index, because crude oil has been pulling back, the airline index has been really strong. Gone to, is this these all-time highs? Yep, these are all-time highs. So it goes to an all-time high this morning, goes to 120.2171. It's now at 120.61. Right here, leg E, MACD is very strong, stochastics at 86. How does it hold is the question. If there's a sideways consolidation, the XLF at 118, 116 becomes really important support. If you look at DAL, the question, the DAN, Delta has recycled, so it goes from a peak F and then it starts to brand new buy mode. Let me put this in, up arrow. What does it do? It goes peak A, peak B, C, D, E, stops at an F, and now it's kind of stuckish. It's only an F/C in the weekly, still very strong. And that says this is the reason why I want to be looking at this. Will we see over the coming weeks some kind of a pullback in the airlines as maybe the autos get even stronger? I mean, look at Ford. We happen to have one of the autos which is doing very nicely. Look at Ford. Going to a leg D in a left side, right side price time match. Weekly chart is improving. Can this be maintained? And that's why I'm saying sector rotation is so important at this particular time. We want to see how it rolls out and what we can do with it in terms of chart patterns that repeat over and over. Dow's up 30, S&P's up.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So, yeah, a couple of things I was looking at here, and then someone else brought it up. Question about TRO, which is the T. Rowe Price group. So when I was doing a scan, looking at Investor Business Daily charts, etc., it seemed to me that the financials were really doing well, and that was companies that were in the financial area where you can sell stuff to people that has to do with the financials. And T. Rowe Price is doing very well. It's at up $4 at $79.53. TROW is the symbol. Weekly, a daily leg D, weekly C, and monthly starting a leg B right here. So this is not to be ignored. This is really important that rotation is going to be. We've never seen this before. When people say it's different, then they joke and say, "Oh, yeah, this time is different, huh?" Yes, this time is different. We've never had a move like this ever in the stock market that's gone from 2009 from the low, and corrections have been rotational so that the indices basically held very well. We haven't had a 20%, 22% correction since, what was that, April or May or something, 2010? And that is extremely unusual. That's why I keep saying it's correcting, but I haven't yet in my weekly charts got something that even represents in the Dow and the S&P a sell signal. That said to me, geez, I needed the price to come down, didn't come down. So those are the facts you have to deal with. So now what I'm looking at is within the context of this rotational aspect, the areas that I'd be looking at are starting to become a little bit clearer, and we've already started to try to do that. And that's on the long side. And on the short side, yeah, it's kind of tough to do, but I think that's also starting to become a little clearer. So this June into July, I think has been really important for a number of reasons. Now, let me just make this clear because we're about to wrap up. The VIX index, I only want to mention it because it's trading now at 996. Remember, it was 1006 just a moment ago. And that's suggesting that buying pressure is still there. And until that VIX closes towards the day's high, there's going to be support. It doesn't mean to say the market has to break out. It just says that's buying support. I want to make that clear. Now, as far as the TLT, I never did anything there. TLT lousy action, 123.04, down 92. My eye says that that yields are still holding really well. And that unless the TLT, if and when, I think it will, the TLT breaks 122.58 support, that's going to be a dynamic change, and that's going to start to impact, I suspect, the home builders. So remember, we're talking about how does this all work in with sector rotation? And my answer is that when we are looking at what is working at this particular moment, it's giving us clues, and what is not working, that's also giving us clues. And I'm going to suggest to you that we've got to keep our eye on something like the XRT for what would constitute as just a bounce, and what would change it from a bounce in the RTH to a real rally. And I don't see that coming until the RTH trades, it's at 79.75, in the 81.90 to 82.50 area. If we can get there, I'm saying, wow. That's a turnaround, and then I'll be expecting that Amazon at that time finally has a little bit of a breather. So keep your eye on a couple of things. Amazon trading at 1,000. In the next 3 days, if it closes under 989, that says, whoops, back into consolidation mode. If it breaks to a new all-time high above the 1,000 and, oh no, that's 1,120. 1,017 round number high back on the 19th of June. That's going to mean something else. So those are parameters, is all I can do. In the meantime, there are certain stocks that are working very well on the upside, and we want to be focused on those. Basil Chapman, Tiger Technicians Hour. Have a great day. Hope to see you tomorrow. Check out my opening call. Hopefully it'll be beneficial to your thinking.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.